Welcome to the joint Swiss Re Institute and Asia Society Switzerland webinar, Carbon Removal and Nature-Based Solutions. Innovative Responses in Australia and Southeast Asia, the third event in our Climate Change into the Indo-Pacific series. Australia, one of the world's largest carbon emitters on a per capita basis, is facing growing pressure to cut its emissions. Current reduction measures are not enough to meet Paris Agreement commitments, so Australia is betting on a range of technological and nature-based solutions for meeting its targets, including carbon capture and storage. Will this bet pay off? As the Australian Prime Minister takes his government's plan for net zero to COP26 in Glasgow, there continues to be controversy around the financial commitments developed countries have made to assist developing nations in their transition to low carbon economies. With Australia's Southeast Asian neighbours from ASEAN, are they looking for assistance? Will carbon capture and storage solutions be part of the deal? My name is Richard Francis, and I'm joined today by two guest speakers from Down Under. Cherie Gray is Swiss Re's global lead for sustainability in Sydney and works with governments, NGOs and insurance companies to develop and finance opportunities that support nature-based solutions and other sustainability practices. Before returning to Sydney, she was based in Swiss Re's Asian regional headquarters in Singapore. Great to have you with us again, Cherie. Our second guest, John O'Brien, is Partner for Energy Transition and Decarbonisation at Deloitte, an expert advisor to the Australian Government and author of two books on climate change and adaptation, Vision 2100 and Stories from 2030. He was the founder of advisory firm Cleantech and has worked across the Indo-Pacific developing environmental technology and finance transfer solutions. John is calling in from COP26. He's in Scotland, so he'll be able to fill us in on the vibe from Glasgow. Welcome to the Swiss Re Institute, John.
Great to be here.
What's going on up there?
Well, it is 7:30 on the first morning, so there's probably not a lot has happened yet. But I have been in the UK for the last week, and even actually on the train yesterday, sort of overhearing a lot of conversation happening around me. And the vibe. So there's a lot of expectation. I mean, I think the British public are quite bored of the whole thing because it dominates every news item. It's on the front page of the newspaper every day. It is, it's just everywhere. Posters everywhere, taxis, everything's branded COP26. So it's a very big deal here. And you mentioned sort of the view of Australia, and we won't get too far into the politics, but there's been a lot of very bad publicity for Australia in the UK and the UK media over the last couple of weeks. So it'll be really interesting to see how that turns out. I mean, my view on what's the expectation? The expectations are actually really high, which is in some ways worrying. It's not going to achieve everything that people want it to achieve. They never do, to be honest. Paris sort of excelled and did more than people thought. But what might happen? So that I think there's probably a few things where it's possible. I think it's unlikely, but it is possible that we end up actually all agreeing that 1.5 is the target. It's not a sort of an aspiration. I think that's unlikely we'll get there. It's possible, but it's unlikely, and that would mean massive transformation and transition through this decade, which we're going to see anyway, but it just even more so. The $100 billion transfer to the developing world and climate justice angles, there's definitely a very big focus on that. And thinking more broadly around climate justice as well, and we can come back to that maybe. Mm-hmm. I think that the finance sector is really that's where a lot of the action is happening, and you guys are right in the middle of that, of course. But we are starting to see the first financed emissions targets coming out, and from the big investment banks, and having 2030 targets, and then that changes investment portfolios and cost of capital, and so I do think we'll see a lot of action around that. And then maybe the last one really is sort of the Article 6 emissions trading side of things, which inches its way forward, by a few sentences each time, and it won't resolve this time, I'm sure, but it will make a little bit more progress, which is critical. So lots of expectation. In some ways, there is a different flavour though. It's not just waiting for governments to act. Companies and the finance sector are driving this now, and governments are just playing catch up. So the dynamic is very different from some of the previous ones, even Paris, I think.
Okay, it's interesting. Just before we switch into our topic, and I've got to also introduce a little bit the format. But just on that, we talk about this issue of a post-pandemic green recovery. Is this one of the issues that's out there? I mean, there's a lot of investment floating around for recovering from COVID-19, but is the feeling that that's going to be an issue that can be pushed forward in COP26? Coordination.
Well, yeah, I mean, it desperately needs that. I mean, I think it was interesting to see where the green recovery money was spent and where it wasn't. And a lot of the massive money that went into sort of the last 12, 18 months with COVID was helping some countries move quite quickly. Not so much in Australia, which was disappointing. But there's if you looked at the stats, and we've got up some papers sort of on that, but it's we need a COVID recovery every year to get to 2030 targets. So we need that amount of cash flowing to be actually able to transition economies. So it's yes, it says that's a nice starter, but now we've got another 10 years of it.
Look, we're here to talk about carbon capture and storage. So I was just interested to get your take on that, John. Cherie, can you give us a little bit of an introduction? We've put the focus here on nature-based solutions, what it means, and what does it mean for people down under in this way. Could you introduce us a little bit to the topic today?
Sure. I mean, I guess we talk about what nature-based solutions are. And the value they provide, and carbon removal is just one of the things. So I start by giving a bit of a shout out to all the benefits that nature provides. Look, 55% of global GDP is actually dependent on biodiversity and ecosystem services. So a lot of that is actually taken for granted. A lot of that is from the rivers and lakes that provide the water and irrigation, the fish and marine life, the tourism, for example, even just coral reef tourism, that's worth about 36 billion. We rely on plants and medicine. So, I just want to give the context that, we really need to protect nature as an asset, because as nature degrades, I mean, so does our quality of life, both physically but also economically. But now as an insurer, at Swiss Re, as a global reinsurer and insurer, what we want to do is we want to make the world more resilient, and nature plays a really important part of that. So we see the increase in frequency and severity of weather events, and nature actually provides a lot of protection for property and people's lives. If you take mangroves, for example, it's estimated they protect over 15 million people on coastlines from catastrophic tidal waves. And without functioning coral reefs, the estimated increase in global storm damage is over, 200 billion US. So you can see that there are a lot of benefits in protecting and preserving nature-based solutions. And as well as protecting from the weather events, nature also protects us in terms of climate adaptation. So as we see the impacts of climate change, it's not just manifesting in the weather and natural catastrophes, but it also means that nature plays a much more important role in capturing and storing carbon. So I guess just to provide some examples of that, we've all learned at school about the trees actually store the carbon dioxide, and a lot of the reforestation and planting programs that are going on. But what's also really cool are mangroves, again, so blue carbon, seagrasses, things like that, because these these ecosystems actually store about 10 times more carbon than terrestrial forests. And the other area is, I guess, the carbon that we can store in the soil, because the world's soils are the second largest carbon sink, second only to oceans. So there are a lot of benefits and a lot of options where nature can actually support us here.
Cherie, I'm going to flick it over to John in a second about the technological side here. I mean, we're going to store carbon. What about? I hear that we need to be storing in order to meet 2050 targets. To keep temperature at 1.5 degrees, even 2. The latest Lancet, the IPC reports, and the Lancet countdown reports are highly pessimistic that we can do this at this point. We've got to somehow take 10 to 20 gigatons of carbon out of the air basically every year. I mean, is nature going to be able to do that if we do the right things?
Well, firstly, we've got to reduce emissions, full stop, right? Before we even start talking about removal, we just need to reduce the emissions. But unfortunately, that isn't going to be enough. So there is still going to be our legacy emissions. There is always going to be those hard to abate sectors. And there's also the carbon dioxide released from wildfires and things like that. So carbon removal is still going to be a necessity. But there isn't going to be, a single right or wrong. There's no one size fits all. And it's very much about taking a portfolio approach, because every landscape, every community, every geography is going to be different. We can't plant trees everywhere because we still need to grow food. We still need to appreciate a lot of the co-benefits and the indigenous lands that needs to be protected, and we also need to make sure that the right solutions are used in the right context and the right environment. And, we can give you some more examples of that later. So there is a role for nature and tech to play alongside each other. But importantly, nature is here now. It's ready now. It's here to actually be utilized and optimized. There's a lot more that we can do. But it's also finite. There's not enough land to actually plant all of the trees that need to be planted, which is why we need to start thinking about the technical removals. And we need to start thinking about them now so that we can actually scale up and have them highly effective and operational in time. Because if we start thinking about it once the lands run out, it's going to be far too late. We actually need to start thinking about and investing in now.
Okay, let's so we have these two approaches, nature-based, and I'll just add that obviously some of the nature-based solutions can be actually pretty technological as well, quite high tech in what they're doing in this sense. But John, we know the Australian Prime Minister Scott Morrison has flown across to Glasgow with the plan for getting net zero, by 2050, and in his portfolio, a different way from insurance companies, but in his portfolio, he's got a whole bunch of new technologies, including carbon capture and storage. He says he's going to spend 20 billion. I mean, firstly, is that enough? To get these technologies off the ground? Is business going to come into it? But what do you think of this approach of betting everything? He's saying there's no way we Australia are going to be able to reduce emissions in the way Cherie has been talking about. We've got to have technological solutions for this. What's going on?
So I mean, we are going to need technology solutions, and clearly, I mean, as well as the sort of the residual emissions Cherie was talking about, we're going to end up doing drawdown. So we're actually going to be sucking carbon dioxide out of the air because we're not reducing emissions quickly enough. So we are going to need technical solutions for carbon removal, and that can be direct air capture and or carbon capture and utilization in other ways. So mineral carbonization. It can be sort of bioenergy with CCS. So there's a range of technologies that for carbon removal, and actually there's sort of another whole sort of sector of technologies which I think is really important around how do we Using satellite technology, how do we optimize kind of the regrowth and monitoring forests, and can we use AI to determine how much carbon is in a leaf and how much carbon is in that soil by taking satellite photos? And there's a whole emerging area on that, which is fascinating stuff, and I do think actually will be sort of the way we measure carbon entirely in a decade or so. So technology is absolutely critical. We are going to need it. We need everything we can find for this. Technology on its own is clearly not enough. You need the finance, you need regulatory levers. You actually need a lot of education and capability building. So we do a lot of work. We set up in Australia last year the Climate Leaders Coalition with the B team, and in talking with the CEOs of those member companies, one of the biggest challenges is capability build. So yes, we've got a climate team. We could do with a few more people there, but actually what we need is our procurement people and our finance people and our assets and our operations and the capability build across the whole business. And that goes across sort of every company, but then every part of government and every part of the community as well. So technology is absolutely critical, but it's on its own, it's not sufficient. We need to think more broadly around culture and capabilities.
Look, I'm going to throw it back to Cherie now, and because you've introduced that corporate element. I mean, we won't get too much into bashing governments at this point in the lead up to COP26. We still need them on board, obviously. But you were saying, John, that it was particularly the corporates that have been driving a lot of the agenda at COP26. So Cherie, with Swiss Re, with corporates, what are some of the examples of the way this is happening? On nature-based, but if you've got anything on the technological side, I'd be interested to hear about that as well.
Yeah, well, I mean, I'll talk about what we're doing at Swiss Re by way of example on both sides. Because predominantly as an insurer, we provide risk transfer solutions, which means that we can protect the assets, we can protect the service delivery and the outcomes, whether that be natural assets or whether that be traditional kind of grey infrastructure. So it means that we can actually protect nature. We can protect the forestry, we can protect the credits, we can protect the activity, and we can also de-risk the investment, which means that we can make it more attractive for private investors to actually come on board and help projects scale a lot faster. So by actually ensuring and de-risking, by making it attractive to other investors, it also makes it attractive to us as an investor. And insurance companies are, significant investors in the global space. And that's something that, we're also very interested in. And I mean, whilst our emissions are not as high as some other sectors, we are also an off-taker as well. So, I mean, Swiss Re has participated in some of the very early carbon removal certificates, and we've actually taken a 10-year offtake agreement now to help accelerate and scale up the industry. So we've done that with a company based in Switzerland called Climeworks, where they're actually using geothermal energy to store carbon underground in Iceland. And we're collaborating with an Australian company, Southern Green Gas. And, their technology is really cool and disruptive because it's actually a solar powered unit. So again, it's actually negative emissions in terms of the activity that it's producing. And they're using metal organic framework like nanoparticles, which means that it's actually a very efficient process. It actually uses a lot less energy than some other approaches. So that's really exciting to be involved in this, to be able to scale up, but to also observe, because there are a lot of unknowns still. There are a lot of risks that we haven't really worked out. No one's been around long enough to know if the carbon can be sequestered for 100 years yet. So the closer we get to some of these projects and the more we can observe, it's a really great opportunity for us as corporates.
Thanks, Cherie. Look, back to you, John. I'm by nature a bit of a skeptic here, and from what I understand, we have to add like 60% of capacity of anything we've got with carbon capture and storage every year. With that's a huge investment. all the way up to 2050 basically. So how in Australia are you going to scale an industry like that, particularly because Australia is betting on removal rather than reduction of emissions? What's possible? And I'll throw in a second question if you can cover it as well. How do you do that in the absence of a carbon price?
So we will have to do reduction as well. There's no question about that, and we're not doing it fast enough, but we are putting up a lot of renewable energy, and we will do a lot more. The challenge with CCS, as you say, it's not competitive on price at this stage. There are some technical challenges for some of the removal technologies. They're achievable, and I think we'll get through them, and we are going to need it to help us. But the pricing it's a lot cheaper to do other things at the moment. So we are going to need some form of pricing. We do have carbon prices. We've got an emissions reduction fund that's price is going up quite rapidly at the moment. We have a renewable energy target that is effectively a shadow price on carbon. There's a whole lot of energy efficiency schemes around. All of them are carbon prices. So we have a carbon price. We've got quite a few. That pricing will need to go up. And we are seeing sort of in the carbon markets, pricing is going up quite rapidly. And one of the projects we do quite a lot for big companies is actually working through their carbon strategy. How are they going to, if they can't remove, how are they going to offset, and what's the most effective way of doing that when the carbon price is forecast to go up to $50, $100 or more over the next 5 or 10 years. And you don't want to be caught in the market buying credits if you're spending $100 a ton. So looking at what are those strategies, and like Swiss Re, Deloitte invests into projects, and we'll sort of get long-term offsets for our own offsets. But we sort of work with emitters looking at that, and it's coming back to the scale. I mean, it's just mind-boggling how much needs to be done in terms of reduction and removal, and it's going to be a challenge. Even if we're going as hard as we can, it's going to be a challenge to really get there. There's really no point kind of dwelling on the challenge too much, acknowledging it but not dwelling on it. My favourite quote over the last few years has been about why optimism is the best thing, and being a stubborn optimist, which is a term I claim I created. But there's a great quote from Michael Gerintosh, who I'd never heard of until I found the quote. But an optimist is someone who knows how bad the world is. A pessimist is still finding out. So if you've worked out what the option could be, then you've got to be a hell of an optimist, because you've got to make sure that we don't go there.
Okay. On a more optimistic note then for you, Cherie, because I think you're an optimist as well. So, how do you invest in nature? What are we have this situation. I mean, if you plant more trees, I mean, they burn down as well. We've seen that in Australia. It's quite frightening with what's happening with climate change. I mean, what can you invest in? How do you cover this risk of a transition to a low carbon economy in a place like Australia?
Yeah, I mean, look, there's actually a lot that you can invest in. You can invest in the assets, and you can also invest in the activity and operations. And Australia actually has some really unique activities. So there are a lot of forestry projects. There are a lot of managed forest projects, which in itself is, I guess, already recognised in terms of the asset. Not just for timber value, but obviously the sustainability of that timber and the storage of carbon. But where there's actually a rise in commercial activity and investment is in this concept of savannah burning. So, Australia, this is probably something that's quite unique to the Australian landscape. Probably South Africa would be the only place where it's similar, because a lot of Australia actually looks like, what you see behind me. It's a lot of kind of grasslands. It's not all desert, contrary to proper belief. That's only about 20%. And so what is actually emerging is, I guess, an enterprise or an industry of savannah burning. And to also talk about the combination of tech and nature-based, this is actually quite an interesting development, because you've got the traditional landowners that have been burning the land as preventative activity for thousands of years. And they have a way of doing it that has worked. What's happening now is they're actually integrating that with satellite technology, remote sensing, and commercial scale to actually create an enterprise. And it's opportunities like this that I think we need to actually invest in to help scale up more. There is also opportunities to invest in projects. You know, there's a lot of mangrove planting projects happening in different parts of Australia as well. And so the more that we can actually help that happen, the better. The other initiative that is also really worthy of investment and insurance is the land rehydration. So again, something that's probably quite unique to Australia, because in order to store carbon in the soil, you need the moisture, right? And Australia is very dry. But there is an opportunity to actually, you know, manipulate the contours of the land back to their original shape, because a lot of rain actually just goes straight into runoff. You know, because of the way that the land has actually been cleared, it will run off into the ocean, you know, damages the reef. The other thing that can be done is a lot of projects to actually replant and undo a lot of the, you know, the European settlement, I guess, because if you think about all of those lovely willow trees that sit by the riverbed that look fantastic in England, they actually suck a lot of water out of the rivers and the lands. So it's also about helping a lot of the properties to reshape what their native plantations look like, because it actually helps to store more water in the land. So there's some really innovative opportunities in Australia, you know, for investment, for actually like new markets, you know, new risk pools and new markets to actually scale and grow. And in turn, you know, to actually capture the carbon.
And so obviously Swiss Re has an appetite for covering these sort of developments, doesn't it? So I would imagine quite a sizable chunk of coverage could go to this in Australia.
Well, yeah, and a lot of these things, you know, if you actually pull apart the value chain, you know, they're practices that are mostly already in place and tried. You know, what will be missing or what we still need to learn about is, how does that new technology work? You know, how is the sequestration going to behave after a number of years? But in terms of actually getting the project up and running and actually keeping a business going, those are actually very standard covers. You know, any kind of property protection, business interruption, workers' comp liability, those covers have been around for years and years and years.
That's almost sounding optimistic there, Cherie. So
I think I'm a stubborn optimist, absolutely. Yeah.
Okay, we've got a question from the audience for John, and I'm just going to say, so John, if the carbon pricing is going up, will that hold companies back from selling their credits early? So quite a technical angle there on this.
Yeah, interesting. I mean, I guess so. Some of them, and depends if you can survive without the cash flow. So I mean that'll just be a sort of investment sort of strategy on do you hold for and sell for more later, or do you monetize now? So and if people hold, it'll just drive the price up a little bit more, and that'll bring in, you know, new solutions, because the pricing will be going up. I think it's also really important to think about, you know, what methodologies are going to be seen as acceptable, both from a reputational and a regulatory point of view. You know, there's a move away from avoidance methodologies, and whilst they're valid from a reputational point of view, some sort of large corporates may need to just have removal rather than avoidance, you know, and if not already in the next few years. So one of the things we've been looking at recently is, given, you know, price trends seem to be going up, given everyone needs offsets, and you know, it'll take a few years for supply to catch up. if you're investing into offsets now, do you actually invest in the ones that are probably out of the money at the moment? They cost too much, but by the time they're coming to market in 3 or 4 years and generating credits, the price might have caught up to them. So can you be a bit ahead of the game when you're looking at which methodologies you're going to be using? So yeah, absolutely. I mean, it's ideally it becomes a very liquid market. There's lots of players, and people have different investment strategies, and some will hold, and for the windfall later on. So I don't see that as a problem. I see that as a functioning market, and that would be great.
It'd be great. We'll see what happens and how regulation works into that one. We've had a carbon price in Australia before, but that was under a different government, basically.
Well, but I mean, I absolutely, we have a carbon price today. So and as much as the government says we haven't, we have a carbon price today. Okay. It is pretty low. The regulations are loose. The safeguard mechanism isn't tough. And it will just sort of when we need to bring down emissions and decide we're going to go harder, we just increase the safeguard mechanism, and it's all there. So we have a carbon price, and so the methodologies is really important as well. One other bit actually I was going to talk to earlier was also around the whole economics argument, and then some of my economics colleagues have been doing a lot on that recently, and there was a Asia-Pacific Turning Point report came out just a few weeks ago. I saw that, yeah. On the climate damages, sort of if we don't act, and across Asia-Pacific, it's some ridiculous numbers, but it's sort of $96 trillion smaller losses in the next 50 years if we don't do anything. And then if we do something, we can sort of pick up, recover about half of that. But the concept that not taking action has no cost, it has been dispelled. So it then reconfigures how governments think about this, and it kind of goes, well, actually, it's cheaper to take action. And that was the purpose of those reports, is just to sort of reframe that argument, and it is. Yeah, it's powerful stuff, and it has been sort of read carefully by governments, as I understand it.
We're glad at Swiss Re and Swiss Re Institute to hear that those sort of reports come out, and I saw it there, and I'm sure Cherie would also be saying, look, we've been telling people this for years and years, the risks. So it's good news for us as well when other people get on the bandwagon, isn't it, Cherie, in this way? So, look, you did mention, sorry, I'm going to sink into, because we promised to also cover the Southeast Asian countries in this. And, John, you've worked across that area quite a bit. I understand that there's quite a few initiatives, maybe not on carbon capture, but also going up into Southeast Asia. We'll get a little bit off the carbon capture issue for a second, and just say, I'm hearing things like, putting a cable across from solar panels in North Australia all the way across to Singapore and everything. Tell us a little bit more about how Australia is trying to, we've heard there's a new pact with ASEAN, with Australia. What's going on all of a sudden?
Yeah, I mean, it's interesting, the sort of the discussion around exporting Australian solar energy effectively, and can you do it through a cable to Singapore? And from probably a financial and a technical point of view, it's actually makes a lot of sense. So Sun Cable is the company promoting that particularly, but there are others. There's can we make green hydrogen and put it on boats and sort of send it up to North Asia, just as we've done with natural gas and coal and iron ore. So it's a natural progression in some ways of the conversation. There's a fair few challenges, and we can dive into a lot of that detail if needed. But is there really a massive green hydrogen export market, or does Japan and Korea just build offshore wind and create their own green hydrogen? When the pricing gets right, maybe it's cheaper to make it here and ship it over. So there's, Australia's sort of has exported things for a long time, and it's now looking, can it export its solar energy? And I grew up in the UK, the only thing I knew about Australia was that it was sunny and it had kangaroos, and and it is sunny, and there's lots of flat land out there that's cheap. So it is. I mean, it's possible. And I do think we will see some of those projects come to market. But more broadly across sort of ASEAN and North Asia, I mean, there's a lot of activity happening. It's at different levels and different scales. But as we're seeing governments have net zero targets in Japan and Korea and China and to some extent through the parts of Southeast Asia, there is a lot of activity driving mostly renewable energy at this stage. The offset markets have been very active there to service European clients primarily, and North American to some extent. So there are big offset sort of activities there. So I think it will continue to grow pretty rapidly. And I do think one of the I think somewhere deep in the Prime Minister's plan the other day, there was something around setting up trading schemes with ASEAN on carbon, and there'll be a bit of work to do on that. But I do think we're not going to see a global carbon scheme agreed in the next 2 weeks here in Glasgow. That's not going to happen. But I think we will see increasingly bilateral agreements where we can buy yours and you can buy ours, and there's a bit of toing and froing there, and that might grow out a bit like the sort of the trade agreements, and can we get a pact of 10 countries all kind of with a common trading scheme and certificates they recognise from each other, and I do think we'll start seeing that, and ASEAN would be a great sort of first spot for Australia to play, I think.
Cherie, I'm just conscious that a lot of these projects will need cover in this way. Is there an appetite? You've been up in HQ for Asia in Singapore. Does Swiss Re and its clients, they have the appetite, the sophistication across Southeast Asia to do this, to cover this sort of agreement?
Well, I mean, look, Asia is very much a growth area for us, so we're always looking at how we can, support the market and our clients to actually grow, because there's just so much potential. And there's also a lot of potential to help and improve the education and awareness and the role that insurance can play as well, because, the markets are not as mature as what they are even in Australia or the UK, or America. So there's still a lot of work to be done in terms of educating, what can be insurable and what can't, and also getting the right actors together as well. But it's definitely, we're here to stay in Asia. We're heavily invested, and it's an area where we do very much want to grow and support.
I've got some questions coming in from the audience, so I'm going to have to move quickly through these questions. John, how are you seeing companies balancing the risk of cheap, less qualified certified offsets to fast track versus their reputational greenwashing risk? A little bit like the question you had previously, right?
Yeah, and it's and companies are looking at it very seriously, and certainly historically, it was okay to buy 50-cent credits, that were, a few years old, and that did the job. And it's really, certainly for larger companies, that's just won't be acceptable and will be called out. And going to the co-benefits that Cherie was talking about, and it's kind of there's increasingly it's what are the co-benefits? How is it driving economic development or poverty eradication or ecosystem sort of rehabilitation? So looking at all of those angles is going to be increasingly important, and it's not okay to just find the cheapest offset out there and buy it. So you have to think a bit more deeply. There's particularly if you're a heavy emitter, there's a large cost, so if you're offsetting hundreds of thousands of tons, there's the economic reality of that as well. So you have to balance kind of going, well, yeah, we want good quality ones, but we're not going to spend $100 a ton if we don't have to. Maybe we spend $5 or $10 a ton, and if you're not in the compliance market, so the standards will need to increase, and reputational risk is very front of mind, I think, for most of the leading companies.
Okay, another one on solar energy. Why would Australia export a commodity like solar energy that is needed locally? Will Australia just burn coal locally that it currently exports as no one else wants it? An interesting question here. You can even blend in a little bit of climate justice if you want on the export side.
Yeah, there's plenty of layers to that. We've got there's enough land and sun to do 100% of all our needs and export some. So that sort of gets over that. We've got an awful lot of land out there that is not much use for anything else. In terms of exports of coal, that is going to decline clearly. It's not going to fall off a cliff in the next 2 or 3 years, over the next 2 or 3 decades, definitely. When we will see a rapid wind down of coal-fired power generation in Australia, we see there's coal-fired plants coming out of the market pretty quickly. They're becoming sub-economic, and the owners just kind of go, well, we need to shut it down. So coal is going to come out by 2030. We're seeing there's probably only 2 or 3 coal-fired power stations still operating, and they'll be in their wind down, and there'll be other firming technologies, sort of gas and storage as well. But it's we will be winding down our coal use, and there is a real challenge for governments on the fact that coal exports is going to decline, because that it's a huge revenue for the company, and there's a whole lot of taxes in that. So how do we pay for all the services? And so it's a real economic wicked problem around this, but it's going to happen. So we may as well do it proactively rather than let it happen to us.
Okay, I'm not sure which one to ask you, Cherie, of these ones, but there is one which says, how does an insurance company market the risks it takes on in this area of activity? So I'm not sure if we're talking about repackaging risks and selling them on, or in ILS or something like that. Is that possible? Green bonds, ILS?
Accounting for it. Maybe Philip, just pop in the chat and clarify.
Okay.
I guess I'll take on both. Look, in terms of marketing, nature and I guess is an exposed market. So there's actually untapped potential for an insurance company and a reinsurance company to actually create new products and address new customers and channels. And then in terms of, carbon removal, this is actually a growing market. It is going to need to be as big as the oil and gas market. So that creates a lot of opportunity. And in terms of marketing, I guess it's also about how we help our clients transition, which might help address the next question around re-employment. Because this is a really important, it's a challenge, but it's also an opportunity, because these businesses need to actually change their business models. And we all know that of change is because of fear of the unknown. So there is a role for insurance to play to actually help to de-risk the transition. And what we see is a lot of great organizations and companies having forethought in that. So there is a lot of exploratory work going on. There are a lot of these companies actually supporting the testing and innovation of new technologies. We're seeing a city like Newcastle, which has traditionally been like a coal mining, steelworks type of area, try to reinvent itself as a hydrogen hub, because what they're doing is they're actually celebrating that they've got a community that is full of technical, capable, hardworking people. So they're actually going to invest in retraining them on the new technology. So there's absolutely room for re-employment and retraining. It's something that does need to be thought about now before it's actually too late.
You've addressed there a question there was about transforming the mindsets and culture in business and finance as well, which was a question that came in separately there. John, you were...
Yeah, I was just saying, and I think that regional transition piece is really important, and it's one of the things I've found disappointing in the sort of the last 15 years or so has been the sort of a big industry shuts and there's suddenly a great big panic, and we have a task force, and how could we ever have predicted that a coal-fired power station was going to shut, or that the steelworks was going to be in trouble? And it's like, well, actually the role of government, but more broadly, the collaboration between government and business and community, all with equal responsibility in that, should have long-term orderly transition plans. This is going to happen, So let's actually plan for it. Let's make sure that we have the new businesses coming in, and and whether it's hydrogen or whatever it might be, creating good employment, valuable employment, and actually probably higher value employment. And just thinking through how we're going to do that, and how we're going to invest in the infrastructure and shared infrastructure that may enable that, because it is going to happen. It's we can put our head in the sand and say it's fine, we'll just keep doing what we always did, but it's going to happen anyway. So that's the bit I think Australia has done quite badly in this, and it's starting to get better, but is actually sort of recognizing that regional transitions are going to happen. And we need a 10-15 year plan to get us there, and everyone, and it's not just government's responsibility, it's everyone's responsibility to come to the party on that.
This is the transition risk to decarbonisation as well, Cherie, which Swiss Re obviously is covering to a certain extent with its clients in this way. Look, to our audience, thank you for the questions. I'm sorry there's some interesting ones coming in, but we don't really have a lot of time left in what we're doing. And I'll just make some comments. Philip was saying mark to market simply means the ongoing ability for insurance firm to revalue the risk as it's taken, and for increasing, will there be a need to relook at the remediation assumptions in shutting down coal plants? In the past, governments have taken on nuclear remediation costs. Will there need to be more of that for the coal sector? I think we can broadly say yes, of course, as you've been talking about there. The specifics would probably be, we'd need another webinar to look at that. A quick comment, John, and then we'll have to start wrapping things up.
Yeah, no, I do think there's definitely a role there, and I mean there's been quite a lot of chat in the last little while around some sort of transition bank or green bank, where it takes the sort of declining assets and actually sort of helps manage their exit effectively.
So bad bank effectively, right?
Yeah. And so I mean it's really hard for a private company to be operating a coal-fired power station that's losing a lot of money, so they'll shut it down. So, but maybe we actually need it running for another few years just as we transition. So again, that orderly, long-term, orderly transition planning, and there's definitely a role for government in being part of that.
But at the same time, we're running out of time. Is the
Yep.
Very much. Look, sorry, we can't. There's other questions that have come in also on the Slido. My apologies. We can't address all the questions because I'd really like to now have a final wrap up from our experts. And I'm going to start by reminding everyone about John's new book, Stories from 2030. As usual, I'm bad with titles, but John, just in this kind of, as your wrap up, what are the top 3 messages or takeaways from the book that would be relevant to our event today?
So the original one, which I launched at the Paris Climate Conference, Visions 2100, was how do we reframe the whole discussion on climate change? So it's not, yes, it is a massive challenge, and it's massive disruption, and therefore it's a massive opportunity. So how do we reframe it as an opportunity to, yes, resolve the climate issue, but how to build better societies and build better communities and enable people to have more fulfilling work? And actually, sort of, there's a whole lot of problems where the economy and society doesn't work very well. So let's use climate to actually address some of those as well. That was around people. I had 80 people writing around what the world in 2100 might look like, and the books around the psychology of communication. This one has another 80 people, half returnees and half new people, writing, sitting in the year 2030 and looking back over the decade and what happened in the 2020s. What happened in cities and finance, and quite a lot in finance actually, and governments, and also the challenges we're going to address. So are we going to have emissions havens where you can do your data processing with with old coal in Kazakhstan or somewhere globally, and looking at those challenges. So the important bit of this for me has been we can't actually plan where we're going to unless we have a vision of where we want to be. So it's all around, okay, let's actually get our bearings of where we want the world to be in the long term and now sort of over the next decade, because then that enables the whole community and government and business to have a bit of direction and enable us to go head in vaguely the right direction. We don't know exactly how we're going to get there, but we do know where we want to end up. So that's kind of the reason for it. And there's a lot of psychology around the fact that optimism will achieve more because you will get around hurdles. About positive storytelling will engage people and actually make people want to come with you on the journey. If you tell people the world's going to end, unless it's going to end this afternoon, they're probably going to ignore you. If you tell people you can build a better world and be more engaged and have a happier community, then actually people will engage and come on the journey. So that's how do we reframe this whole climate debate?
For business, it seems like there's almost like a gold rush mentality in Australia at the moment around this, isn't there? That's pretty optimistic in many senses.
Yeah, I mean,
they can make money,
and absolutely, and the work I do is it's entirely about strategy and finance. There's no green fluffy stuff going on. There's an awful lot of money to be made and lost if you get the timing wrong and you get your actions wrong. So for companies as well as whole economies, so if you think carefully around this and seize the opportunities and manage the risks, maybe with a friendly insurer helping you, but it is massive disruption. We're going to be disrupting the economy more quickly and in a greater way than we've done in any time ever. If you play that wrong as a company, you are going to lose a lot of money. If you play it right, your shareholders could be laughing. So there's a lot of opportunity in this disruption.
You were talking across the Asia Pacific with the Deloitte report, which we give another plug for Deloitte here, something like 47-50 trillion. Yep. I mean, those figures are just inconceivable in terms of the opportunity that's out there at this point.
Yep. And I do I was just picking up on a question there, just very briefly on carbon capture and storage. So it's it can be used to tack onto the back of fossil fuel power stations, but it can be used to decarbonize industry. It can be just used for direct air capture and pulling carbon dioxide out of the atmosphere, which is probably more important in my view.
Thank you very much, John. It's been great having you. And so I'll now pass over to Cherie for her key takeaways, wrap-ups, and also, just a wish. We're talking about optimism here, a wish for what could be coming out of COP26 or even more locally with government policy and regulation.
Yeah, I mean, broadly speaking, firstly, with nature-based solutions and nature, what I hope will be fully acknowledged in COP26, I know a lot of colleagues are there, intending for that to happen, is that nature is very much recognised as an asset. And so it needs to be protected, it needs to be invested in, and this is also where there is a role of insurance to actually support that. So I do hope that comes through loud and clear on the government and the corporate side, because as I mentioned at the start, more than half of our GDP is actually dependent on nature. So once it's acknowledged and integrated into the accounting and the value chain, then it's really going to impact our decision making. And I guess the role of insurance more broadly, this is a new market. This is actually an opportunity to transition. So remember all of the insights and experiences that insurers have that we can share. I mean, we've spent a lot of time working with governments and businesses around supporting them in flood planning and how to build, houses and things like that. So this is another new risk pool that we're starting to learn and develop insights, and we can also support. And, I guess in terms of the actions or the takeaways, reduce your footprint. It's all about, reduce, but still use nature, plant the trees, get the ecosystems healthy, but also start to actually plan that transition and that investment in the technical removals before it's too late and it's too cost prohibitive. Actually make sure that the action plans are starting now.
Well, I think this is the message that Swiss Re's CEO Christian Mumenthaler will be taking to COP26, where he's going representing not just Swiss Re, but also the WEF's climate change group, which he's co-chairman with the IKEA CEO. So hopefully, as John has said, the optimism, the push from the corporate sector at this point may be leading some governments into a better space in terms of climate change. Well, there we have it. An optimistic note I've managed to bring in from thanks to the help of both of you there, and a timely discussion today as COP26 warms up. Hopefully with warming up more than the climate, but also maybe a global climate for change this year, or we hope so.